3, 2, 1. Hi everyone, thank you for joining me. It's Akhil here from Our Mortgage Broker. As you can see, the guy to the left, you may have seen him on national television. You may have seen him at his own property networking event in London, or you may have already seen him on YouTube. I'm joined by Ranjan Bhattacharya, also known as the Property Guru, a well-known personality and celebrity in the property space. Ranjan, thanks for joining me.
Thanks for having me. Thanks.
So Ranjan and I go back probably around 5 years now. I think we connected at his, as I said, his very own property meet, which is called the Baker Street Property Meet, which is held on from memory, it feels like a distant memory now, but the last Wednesday of each month, I believe.
Yeah, last Wednesday of each month. We will be coming back as soon as we're able to, restrictions allow. We're doing a live stream at the moment. So, I mean, when we met in London, we were the largest monthly property networking meeting, 300 people a month meet in central London. Hopefully, we hope to come back around about September time and restore those meetings. It's a great meeting point for all sorts of property people. But for now, we've been doing an online live stream, which we're going to continue to do once restrictions are lifted. But we get about 1,200 people on a rather unique live online networking experience as well. So we're going to continue to do one Baker Street in-person meet a month, which is the largest in the UK, and the largest live stream in the UK as well, with 1,200 people plus every month too.
No, it sounds good, and I've been there. I've been there in person in London, and I've also been there online. So it's great value, great content with great speakers as well. So if anybody that hasn't been on there, log on to Baker Street Property Meet and follow Ranjan's links to his online seminars, as well as his meetings in person, which hopefully will kickstart. Hopefully in Q3, we believe.
Or YouTube. Maybe we can put a link to the YouTube channel so that people can
yes. So talking about YouTube, as I said, Ranjan is a bit of a YouTube sensation. I think he's probably the third biggest property celebrity on YouTube. What was it, 15, 20,000 subscribers now?
No, we're up to just hit 16,000 today.
Well, there you go. 16 is not bad in what, a short space of time. So just got a whole bookshelf of great videos, great insights into why property is still a great asset to invest in, whether it's residential and commercial, which is well up Ranjan's street, because he loves buying commercial and trading commercial property, which we're going to be going into. And I've also done a number of videos with Ranjan. I've been invited to his show and his channel on probably about three or four occasions now. So yeah, look out for the videos. The great content on there. And a lot of our videos that we've done together have reached probably, I don't know, 5,000-10,000 views as well. So
no, more than that. I think the video we did together on the first one, that's had more. That's pretty much 25,000 views. I don't know the stats.
Wow.
Yeah, but it's a very popular video.
Am I due a royalty check or anything like that by now? Then
you're due a massive beer as soon as we're able to.
Oh. I'll take
to meet up. Yeah, no, we've done some good videos. Yes, you're box office mate, so we'll continue to do some more.
That's good. No, it's all about putting out content for our viewers and sharing insight and how to invest in property the right way, I should say. So thank you for that, Ranjan. So as I said, Baker Street Property Meet is a great space to network, meet people, and get the information and knowledge that everyone should be looking for. Ranjan's also a mentor. He runs his own workshops, in particular around commercial investing. For more information, log on to bakerstreetworkshop.com. I will leave these logins and these links below in the comments box for you guys to look into. And I'm sure Ranjan will look after our viewers by way of a nice discount code from our mortgage broker. Is that okay, Ranjan?
Yes, yeah. I'll share a little code or something at the end that people can use.
Perfect. Okay, so let's get into property, and in particular commercial property. So Ranjan, tell us about your portfolio. Are you a commercial guy or a resi guy? For those that don't know who Ranjan Bhattacharya is.
Well, a quick background. I've been doing property since 1990. I graduated from university with a computer science degree. I got a job in a management consultancy firm, Accenture, and I took my employment contract without starting work. And I walked to a bank and they actually offered me 100% mortgage because Accenture was seen as a very good company to join, and they just gave that at the time. So I bought a property, quickly realized the power of renting these things out. Pretty much through the 90s, bought one every few months, quit the day job. In 2001, I went full time. Then I did a lot more developing. So we developed larger buildings or converted larger buildings into flats to keep for long-term rental. And then around about 2001, I also got into commercial property as well, mainly retail, but more recently offices and some specialist commercial units as well. But even now, although I talk a lot about commercial and commercial conversion, 70% of our portfolio is residential and 30% is commercial. I think the thing is though, you see, people start off with residential property thinking about financial freedom. You can get to about 10 or so, but then you have a management issue. And who's going to manage that? Yes, you can use agents, but you need boots on the ground. Someone has to manage those boots on the ground. With things like HMOs, it's hard to get someone else to manage them on your behalf and still have the same attention on voids and getting the right people in. It's very, very hard unless you have your own people doing it yourself. So you end up very soon with residential property discovering that it's difficult to scale beyond a certain point because the manpower required to manage these things is quite high. Commercial property doesn't have that. So residential property, we have 4 staff or so to manage 70% of our rent roll. The commercial rent roll is pretty much done by me, yours truly, a couple of hours a week, 2 or 3 hours a week. And so commercial property is a lot more scalable. And I discovered that really from what you see with big companies. I mean, big companies do not, the large property companies do not buy individual houses dotted around the place and then let them out as single family lets. They either buy or build 150 apartments in one block, or they do commercial property, because that is scalable. And if you want a scalable property business, if you don't do commercial, it's not going to be scalable. And I should actually define commercial property. It's more than the obvious. It's not just shops, warehouses, offices, dentist practices and stuff like that. But I also include multi-unit freehold residentials. So if I've got 4 or 3 or more flats in one building and I own the whole freehold, that's commercial, because that's not a place that you would live in or can be converted to live in as a whole.
Right. Okay, good. So on the basis of that, you're saying to scale your property business, you must get into commercial because the yields are better, cash flows a lot better, and ultimately the hands-on is a lot less. And you speak quite candidly about that, in particular around the full repairing and insuring leases that you put in place. So for those that don't know what an FRI is, could you just shortly define it and how you put that into practice with your commercial tenants?
Yeah, I mean, most commercial properties are let on the full repairing insuring lease. That means the tenant is responsible for all internal repairs, and sometimes external repairs, as well as actually paying the building's insurance on the property. So what that means is that when you work out gross yields, if the rent is £7,000 on a £100,000 property, the gross yield is 7%. Now, with residential property, the gross is maybe £7,000, 7%, but the net yield is a lot lower because you've got all the compliance costs. If it's an HMO, for example, there's HMO licensing, there's the gas boiler certification annually, there are voids, there's cleaning, there's all sorts of maintenance costs come in. But with commercial property, your gross rent and net rent is pretty much bang on the same because all the costs are passed to the tenant. So that becomes very, very powerful. And if the tenant is responsible for arranging the repairs, that means you can own properties outside of your patch. So my residential portfolio is all very concentrated within a few mile square radius. And basically, it's where we have the operating infrastructure and boots on the ground to manage them, to do the repairs, to do the viewings, to do this, that, and the other. Some of the commercial assets are 300-400 miles away from where I live, because they don't need any boots on the ground and they don't need anyone to visit them. So you can scale and you can have geographic diversity. I mean, there are huge advantages with commercial real estate. And I think obviously we have a window of opportunity right now where with the COVID-19 stuff, it's not exactly flavor of the month, but as business bounces back, then it will return to being a very favorable asset.
Okay. So we've talked about, you've talked about why you invest in commercial, and predominantly it's around the maintenance and the upkeep is usually the tenant's responsibility because of the leases that you've drawn up. And the other main factor is the gross and net yielding is very much basically what you earn for a commercial property in gross rent is what you basically take home. Where in comparison with the residential property is quite a wide spread. As using your example, a 7% gross yield could probably quite easily go down to a 3%. So yes, no, I totally agree. I totally agree.
And there's also the time hassle. The time is a lot less, and not forgetting the regulatory hassle. Buy-to-let has been increasingly, the regulation and the rules get more and more every year. The commercial tenancy contracts are business contracts. Hasn't changed much since 1954. That was the last major overhaul of commercial tenancy rules and regulations. They're business contracts, so the law is on the landlord side. There are no votes in increasing tenants' rights for commercial tenants. So that is a huge factor there. The regulatory climate environment is on the landlord side. And because it's not anyone's home, if the tenant doesn't pay, they're pretty much out of there. So there are no real issues at all in getting the property back.
Okay, so for those viewers that are watching this currently and have got, for example, residential portfolios and they want to transition into commercial property. Now, what would you say are the top 3 things to look out for when you're going shopping to look for commercial real estate? So top 3 things you look for, Ranjan.
I think I'm looking for, there has to be occupier demand. And businesses tend to, it's easier to find a business occupier for premises which is in an affluent area. So I look for areas where I judge affluence by looking at the average house price in that area. So if you go on Zoom, national average is 230,000 pound for an average house. So if I look on Zoopla or Rightmove, what is the average house price, property price in that area? If it's at or more the national average house price, then there's likely to be occupier demand in that vicinity. If there's not, it's going to be a struggle. Then again, within those areas, there are pockets where there's very, very high vacancy rates. If there are already 20 units available up and down the street, then you're not going to have much chance. I look for occupier demand. I judge that based on area affluence. I do look for areas of low occupancy, but the ultimate absolute thing you have to look for is if you cannot rent it out to a commercial occupier, then what alternative uses does it have? I won't buy anything unless it's underpinned by alternative uses. So if the existing tenant were to move out, and if I couldn't find another commercial occupier, I'm in a better position with the property empty than I am with it being full.
Okay. I'm going to come back to that point about the repurposing because I know you talk about it quite heavily in a lot of your YouTube videos, and I do want to speculate more about the repurposing. So, no, it's great that you look for the foot flow, the national average house prices, and using Rightmove and Zoopla for those tools. So, giving the viewers a bit more intake about how lenders structure the finance. So, when for those of you that are looking to buy commercial real estate and are looking to acquire the property by lending, raising money through commercial lenders. Just a couple of things that commercial lenders look for. Whereas residential property, they look at the bricks and mortar value. The commercial lenders actually look at who the tenant's going to be. So as Ranjan just mentioned there, is who's going to be the ideal fit, who's going to be the ideal tenant fit that suits that relevant property and that location. So commercial lenders want to know the strength of the covenant, i.e. the tenant, the length of the lease, and how much they're going to be paying you rent that premises from you. So the tenant profile is key from a lending perspective. The other main sticking point around commercial finance is loan to value and the cost of borrowing. So Ranjan, you know, that's pretty high. You know, it's a bit more of a cost factor when you borrow from commercial lenders. Whereas with buy-to-lets, the funding starts with a 1 and it can range up to about 4% interest rate, so between 1 and 4%, depending if you're borrowing in your personal name or a limited company. Whereas commercial property starts with a number 3 and it could go up to 8%. So Ranjan, tell us how do you factor in that cost of additional finance costs into your P&L when you're looking to buy those properties?
I think I would summarize by saying that there are different types of commercial property investors. There are people that do commercial property purely as buy-to-let. So they will just look at they will buy a property, it might be rented to, I don't know, a McDonald's or a Tesco or something. And it's already trading, it's in there, it's a long lease, and it may be sort of 15 years let to a Tesco Metro store, £80,000 a year. So for that 15 years of income to a more or less guaranteed risk-free operator like Tesco, how much money do they want to pay now up front for that relatively risk-free 80 grand a year annual income for 15 years? Mm-hmm. People make the investment decision based on that. And a lot of those guys who do that sort of game have a lot of cash available. And what they're comparing it to is that putting their cash in that sort of asset as opposed to putting it in the bank or on fixed deposits and all of that. So there are people that play the buy-to-let commercial game, usually from the point of view of this is a far better home for their cash mm-hmm. than putting it in the bank. If you're playing it as a debt or a leveraged play, it often is not a great idea to buy something ready-made. In other words, Tesco's already in there, the lease is already in place, you're playing top dollar. The people who buy those tend to want a better home for their cash. I tend to work with people who don't want to put that much cash into one particular deal. It's about finding value and adding value and extracting value from the deal. And that's a slightly different game.
Okay.
So we're looking at stuff where you get a commercial unit which is distressed. It's distressed, the property itself is distressed, and the vendor themselves are distressed or highly motivated. And the property has the option to add value to it. Mm-hmm. So all those three things need to be in place for you to extract value from it at the end. So you get a certain discount because the seller's motivated. Mm-hmm. You get a certain discount because the property is distressed, won't appeal to many people. You get a certain discount, so you get a certain value uplift because you can add value to it. Now with commercial property, you can add value to it by finding a tenant who wants to occupy the site, or you can add value to it by repurposing that site. And sometimes that repurposing with permitted development rights is about making some or all of the space residential. Because then what you do is you add significant, because residential values per square foot are more than commercial values per square foot. Yeah. So if you buy a commercial space at £200 a square foot, it costs you £100 to convert. That's £300 a square foot, and you're getting £500 per square foot out at the end. It's a good little earner. Yeah. So what you do with those sort of situations, by buying value and adding value, you do the project, you get it fully let, and then you refinance it, and then you apply the commercial lending that you're talking about,
Yes, yes,
which typically requires 40% deposit to get a decent rate.
yes.
But the thing with that is that where does that 40% deposit come from? It doesn't come from money that you've put in, maybe a little bit, but not that much. It comes from the fact that you've added value. And if you've added value and bought well, then that takes up the lion's share of your 40% equity.
Thank you.
So
That's
that's
a
how
great.
people without the cash kind of play that game. So you get one loan to buy it, which will be a bridging loan, private investors and that kind of thing.
Yes.
Yeah, 7 month to a year project to add the value, and
Yeah.
then you refinance it with long-term lending, 60% loan to value, using the equity that you've built so that you don't need a cash deposit.
No, thank you, and that's a great piece of advice. And no doubt you deeper dive into that strategy on your workshops that you carry out, which is usually a couple of times a year. So more information about Ranjan's workshops are on bakerstreetworkshop.com. Now, talking about repurposing, I've seen the latest video that you did with Kieran Gill.
Mm-hmm.
You bought a commercial property and you repurposed it, built a lovely property in the back. Tell us a bit about the initiation, how it started, and where you are today with that project.
Yeah, well, if I just start by talking a little bit about permitted development rights, I mean, the government, the fact is that we've got too many commercial properties. Well, we've got a shortage of warehouses, but there are too many shops and there's too much square foot of office space in the UK than is actually required. Yeah. So the government have recognised this. The planners in local councils haven't. They're paying. So what the government have done is said, here's some permitted development rights that allow developers to repurpose these buildings, and they don't have to apply for planning permission. It's far simpler. Now, the issue is the big companies like Barratt and Galliard and all these people, Perisman, they are only interested in repurposing some giant factory or warehouse or some 30-story office building into 300 flats. A shop and uppers or doing a flat behind the back of a shop is too small for them to get involved in. So the big people aren't interested in that sort of repurposing. A lot of the little people have cut their teeth on residential, just don't have the mindset to think commercial.
Yes.
They have got the skill set. They may have done a loft conversion on a house or put in some ensuite bathrooms in an HMO. They've got the skill set, but they don't have the mindset to think that that can translate to simple commercial conversions.
Yes.
So there's this gaping hole of opportunity for small commercial properties to be bought and repurposed by smaller developers, because no one else is going to do them. So this deal, as we say in the video, was bought for £240,000 last year at auction. So it was hidden in plain sight. Anyone could have had it. The permitted development was applied for. A flat was made at the back.
Yeah.
And it's coming out with about 200k profit.
Amazing.
All without any planning permission having to be applied for at all.
No, that's amazing. So you guys bought a property, and there's more information on this on Ranjan's YouTube channel, but they bought a property in Ealing. They reduced the footprint of the commercial premises, which then benefited from 0 business rates. They then built a flat in the back, which is actually a beautiful 1-bedroom apartment. What's the plan with that? What's the exit on that? Are you selling the flat and selling the commercial, or retaining?
Yeah, because it's a JV project,
Okay.
it's not being retained. It would make a very good retainer. So if one person was doing it, I think a lot of people would decide to keep this, because when you've added so much value, yield is a funny thing. I don't actually look at gross yields that much, because the yield on the end value of the property, I would have never bought the property at the end value.
Yeah.
So I look at yield, meaning the rental income on the costs I've put into it. So the purchase price and the development cost.
Which is a real cost, right?
And when you look at the yield on your cost rather than the yield on value, it's phenomenal. you start to get double digits in London. So as a something to keep hold of, fantastic deal. But they've decided to sell. I mean, it was just finished just before lockdown. They've had an offer, a great offer on the shop. Someone's paying 180 grand just for the shop.
Wow.
Now, I mean, the whole thing was bought for 240. I mean, the flat, because of lockdown, they've had viewing issues. I think they're doing video tours and all of that. But it's on the market. The flat is on the market for 425, but I expect them to clear 375 for it. You know, you can see the figures just work.
That's a huge margin, right? And
huge margin.
As you said, it was totally visible. You bought it off auction, but I guess it comes down to that mindset, and you touched on it very well. It's you've done the loft conversions, you've done a bit of residential tart and turns, but it's the real mindset. How are you going to make £200,000 within the space of, what was it, 6 months, 9 months, that conversion?
Yeah, well, it's going to turn out a year pretty much because of the lockdown, but it would have been 7-8 months, quite frankly, if it wasn't.
Which is amazing. And I guess the beauty of that one is you didn't have to apply for planning permission, which is a 50-50 gamble, right? So you thought outside the box, and you're taking advantage of the more loosening of the PD rights that are coming more into play. So that's a great scheme and a great project. So congratulations to all of those involved. I'm going to deep dive into why commercial property, and we've talked about the high streets becoming more and more derelict, more and more boarded up, more and more voids. What's been the biggest issue between March and now with your commercial tenants? And do you think it's still a good play, commercial property?
Yeah, I think there are short-term issues. There's no doubt about it, because what's happened is the government has put a moratorium on commercial landlords. The government haven't helped commercial landlords at all with any relief for COVID-19. They've given relief to the tenants. They have given them grants, you know, and loans and all the rest of it, but not much to the landlords. But what they have gone wrong and done is they've said there's a 3-month moratorium on the landlords being able to basically demand their money, send them the bailiffs or call in the lease, forfeit the lease. As a result of that, big companies have taken this on board and said, we're not paying. So a lot of the giant companies have said, we're not paying. And what I've found is the little companies have actually paid up. So we've got a lot of little companies, and so we've collected, I mean, the national for the commercial rents are paid quarterly. So the last quarter day was in March. The next one is in June. So at the last commercial rent quarterly day, Knight Frank did a survey, and they reckon about 22% of all commercial rents were actually collected.
How much percent, sorry?
Sorry?
How much percent was collected? 22%.
Yeah.
Wow.
You know, and for if you've got a lot of the large blue chips as your tenants, it's a problem. We've collected about 67%. Okay. Now we've got a lot of our things, shops and things are let to smaller tenants. And when we let to smaller tenants, we make sure that if we lease it to their company, we put them on the contract as well, the proprietor on the contract, and the proprietor is a UK homeowner. So there's no getting out of it. You know, they either pay it now or they pay it in 3 months' time with a bunch of costs. What these big companies are doing, like, you know, we received a letter from, you know, some of these big companies are like Reed, for example, the recruitment people. You know, they have they rent an office from us, and they've sent a letter to all their landlords, same letter to all. Coral have done this as well, and they said trading difficulties, blah blah blah. We want a 6-month rent-free holiday, please. Yeah, so we've just told them politely to fudge off, shall we say. Why have we done that? Because what I tend to do, if you go back to what I said in the very beginning, we only buy sites where there's alternative uses. Alternative uses means that we're in a better position with it empty than if they stay there. So With Reed, for example, we wrote them a very stroppy letter. I looked through their annual accounts. They made £1 billion turnover last year, some 200 million profit. Their margins on recruitment agencies is massive. Plus, they're receiving a grant for every location they have. Pay up. And we've said to them, as soon as the moratorium is off, we're enforcing, and there's interest will be charged, so pay up now. Why are we going in so strong? And the same with Coral, because if we forfeit the lease, we will convert those buildings to residential usage.
Right.
And we will basically double the value per square foot. Okay. So if you want to stay there, you pay up. If you don't, then we're sending people in. Now, the reason what they do is they send these letters, the big companies, they haven't got time to look at each site individually. So they send all landlords the same letter. Coral have more than 1,000 betting shops in the UK. They've sent this, all the landlords. Some of those stores, the landlord will be in a weak position, because if the store is in a low value area like Hull, for example, where the average...
love Hull, don't you?
Yeah, I know.
You need to find something in Hull, I tell you.
I mean, this is going to be the real problem for high streets. It's the ones up north, and they'll dominate the headlines. Why? Because the house prices are so low, it is not worth the cost of conversion. Right. So those will stay empty. No one wants to trade there, and it's too expensive to convert.
Right.
So when Coral write these letters to their landlords, they're just writing a blanket letter. The landlord of those properties is in a very weak position. Right. If they don't give Coral a 6-month rent-free period, what do?
Right.
They've got to take on an empty shop, pay empty business rates. They're not going to get a commercial guy in, and it's not worth the while converting. Yeah. But because you asked me about the characteristics, and I mentioned footfall and all of that, because all of those characteristics and affluence are sort of met with the properties that we have. And also, we've only bought the Corals that we've got have only been bought in buildings where the rear of the store has a little yard and there's windows, and it can easily be made. They were only bought because the back could be made into a flat.
So you've got a plan B in the background, right?
Piss off. If you don't want to pay, you piss off. Yeah. And very few people's commercial portfolios have been built around that sort of robustness about alternative use.
Well, that's amazing. So yeah, no, you're happy for them. You're happy to retain those types of tenants, and as you said, Coral and Reed in particular there. But if they don't pay, you're saying fine. I'll take back the premises, and that you're gonna repurpose that, and you're gonna convert it into residential. And as you said, that the yields are going to be a lot far greater. But you're going to give them the opportunity to comply with the leases in place and pay your quarterly rents in advance. So
what will happen is, once we hit back at them, they'll look at the individual property and they'll think, well, we want to be in this location. It's an affluent location, blah, blah, blah. We're better off paying it. Yeah. And with some other landlords where they will perceive them as not having any alternative uses, they'll be hung out to dry.
No, that's amazing. Okay, last question for you. I've taken up a lot of your time this morning, but thank you for joining me. Last question is property values, property prices, 2020, 2021. What's your forecast for property prices in 2020? And are they going to be going up or down in the next 3 years?
Done a video on this.
Actually. I know you have.
A couple of days ago. I think, in a nutshell, it's property prices are really, really linked to unemployment.
Yes.
And the big elephant in the room is how quickly unemployment levels will return to pre-COVID-19 levels. Because I know a lot of people have been furloughed, that's fine, but the issue is when businesses get back to work out of lockdown, they are not going to go to 100% capacity from day one. So will they need all those staff from day one?
Yes.
If you look at restaurants, if they're coming back and they're only doing takeaways, with any business, is all the business that they had on the last day before lockdown going to be there on the first day coming back?
Yeah.
So there's a chance that they're going to need a percentage of their staff. So what happens to those rest? And how long do those people take to get re-employed? And there are going to be a whole bunch of businesses that ain't going to come back, because there'll be people taking early retirement, because it's a level of effort to keep a business going every month. But if you were forced to stop and then you had to kickstart it again, it's a whole different level of effort in order to kickstart. So you're assuming that everyone is at the stage of life where they're motivated to kick it in.
Right.
You know, I've got a guy in my mastermind program, and he's got a tenant who has a restaurant, and he's got 1.5 years left on the lease. So this tenant has taken all the government grants and all this sort of stuff, and he's basically saying to his landlord, the guy on my mastermind, he's saying, well, possibly looking at early surrender here. Because what he's thinking, well, let's get the grants.
And do a run-up.
I'm at my age. I'm at a certain age in my life. I've only got 1.5 years left on the lease. Let's do a deal with the landlord for an early surrender and call it a day.
Cheeky, isn't it? It's very cheeky. Very, very cheeky of him.
But is it worth them, carrying on?
Yeah.
A lot of these private gyms and all of that are in real trouble.
I agree with you. I think
there's a whole bunch of businesses that won't come back.
Yeah.
For all reasons, failure or. So the question is, how long is it going to take for those staff members to get re-employed?
Right.
Until unemployment is back to so while there is this period where there is unemployment, house prices are going to be very subdued. But employment will bounce back, and as soon as it does, property prices will skyrocket.
Right. Yes. No, I totally agree, and I think there's a huge
because of quantitative easing.
Yes, no, I totally agree, and I speak about this to my clients directly on the phones, and I've done it on a number of videos. I think property prices are directly linked with employment. If you look at the US, they've just announced last week they've had about 14.6% reduction in employment, which is huge, which is absolutely huge. So I think we're going to have a knock-on effect. My prediction is going to be a U. How far we are down this U curve, I think we've still got some way to go in 2020. Are you predicting a U, V, or a W in the next year or two, Ranjan?
I don't know about W. W is really going to be about other spikes and things, and that's medical. And I think it's just too early to say, to be honest with you. Yeah. We just don't know the level of businesses that are going to return. The analogy I use is that when there's a cyclone, and you see a brave news reporter reporting live from the cyclone, it doesn't look much more than a windy storm. They're standing there reporting live, they've got a mac on and they've got their umbrella and it's blowing around in the wind and it's raining and all this sort of stuff, and they're giving their live report. Yeah. You only see the effects the next morning. When they're on the next morning news and they're walking around and there's debris all over the place and houses collapsed and all of that. So at the moment, when you're in the middle of we're in the middle of the cyclone, it doesn't look that bad. Everyone's, out in the parks and enjoying their time and all of that. But, in the months to come,
it's the aftermath.
We don't know whether those people will actually have furlough jobs to get back to.
Yeah, no, it's sad. I think there's going to be huge casualties, right, in people, in businesses. But I think now's the time to repurpose our minds. We talk about repurposing property. Maybe we need to shift and have a change in mindset around business plans, investment strategies. If you work for a company, can you go self-employed? Is there an opportunity to do something for yourself, maybe on the sideline?
I'll give you something controversial for your video. One of the things that I believe, this is my personal opinion, is that the government have done a knee-jerk reaction in financial support, and in many cases, they have just been too generous. And they've encouraged closure. The government did not expect so many businesses to close down. Right. Let me explain what I mean by that.
Please, yeah.
if you know you're going to run through a difficult trading period, and there have been times, like in the run up to breakfast, for example, when there was uncertainty. It was a difficult trading period because there was uncertainty. Volumes were slow. Activity was slow.
Right.
Because of coronavirus, trading activity was down in many sectors. Right? If the government says to you, trading activity is going to be down, guess what? You can furlough your staff and we'll pay them 80% of their salary, up to $2,500 a month.
Yep.
You can claim 20 grand a grant based on your business rates for every location you have. Yeah. We'll give you a 50 grand interest-free bounce back loan. Then there's C-bills and all of that. Is it worth trading for a difficult period?
Yeah, something to think about.
If you have a Costa franchise, we've got a couple of Costa franchisees as our tenants. If you're a Costa franchisee, we had a little meeting this morning. We're discussing strategies with rent collections, and so we've got a Costa franchisee who's got 35 Costa franchise outlets. Right, so you've shut them all down. You shut them. Why? Because you furloughed all your staff, right? Very few of them were earning more than the 25 grand, so they're getting 80%, so they're all fine. You're getting £20,000 grant. You get a £20,000 grant, which is something you don't have to pay back, and you get this per store that you pay business rates on, up to a maximum of £800,000 per company.
So you
right?
get,
so they have just received 35 times 20.
700, isn't it?
Yeah, £700,000 grant. Then there's a coronavirus interruption loan and whatever. So if someone's telling you that your trading activity is going to be down a little bit, what is the point in opening? Now compare that with round the corner from our office, we've got a mom and pop independent coffee shop.
Yeah.
They're open because the owners of the business are in there. Now coffee shops aren't, because they have to find a way to trade. Now coffee shops aren't regarded as essential. So what they've done is they've done a deal with a local farmer and they're selling eggs, fresh eggs and tomatoes and stuff like that. They don't sell many of them, but because they can say they sell essential produce, they can sell coffee as well.
That makes sense.
Yeah. So they have decided, they've found a way to keep open. Yeah. But with some of these companies, it's not worth the effort.
No, it's not, because the
government and the taxpayer is paying for them to sit on their arse.
That's very, very controversial, and it's going to be interesting of the aftermath once things get back to the new normal, in how the government now look to recoup the money that they've dished out. So it's going to be interesting times. Hey ho, Brexit seems like a doddle now compared to COVID, eh?
That was all the hoo-ha about falling GDP when leaving
Brexit,
EU and all of that. Yeah, I mean that was all nothing.
Yeah, compared to what's going to happen. Yeah, no, it's interesting times, but
us over nothing.
The beauty is we've got people like you that are full of wisdom, full of knowledge, full of experience, and I tell all my clients directly, indirectly to rather than watching Netflix, well, I occasionally do as well, but educate yourself and speak to people. I know we can't network in person, but there's lots of Zoom calls that you and I jump onto, webinars and so on, to educate ourselves. There is definitely going to be opportunity, and I tell my clients, whether you are a first-time buyer or you're looking for a deal, now's a great time to buy, because you've been in the game since 1990, and no doubt the best properties you've bought, I bet you, are going to be in recessions. Am I right?
Absolutely. And it's the stuff that no one wants at that point in time. You can turn it around. If you've got a plan to turn something around, you've got to do it. Fortune favors the bold and all that. I mean, I know they all sound a bit buzzwordy, but it's actually true. You don't. By the time the media has got in on the act and reported it, it's too late.
The boat sailed.
It's
the way I look at it. But no, viewers, thank you for listening. Ranjan, it's been a pleasure as usual. No doubt we'll have that beer very soon. As promised, I'm going to leave Ranjan's social media links below in all the social media channels. Please follow Ranjan and his YouTube channel. For those of you that are interested in property and for those that have made it this far in the video, please log on to Ranjan's YouTube channel. Make sure you subscribe, click that bell icon. I sound like you now, Ranjan, don't I? Click on all that good stuff and you'll be reminded when he goes live again. For more about our mortgage broker, listen, we're an independent mortgage brokerage. We've got a whole host of experiences. We've got a multidisciplinary business here. We're open for business. We work with a whole host of lenders. So whether you're buying your first property, you're a portfolio residential landlord, or now you want to diversify and move into commercial property, get in touch with us at ourmortgagebroker.co.uk. We'll be delighted to assist you. Whether it's a Monday or a Sunday, we're always open for business. Ranjan, anything else you want to leave us with, my friend?
No, I just think, well, I think I will just finish by saying that this is going to be an unmissable opportunity for people who are savvy, know what they're doing, and are a little bit brave. Because I think what people, it's a cliche, unprecedented times and all of that. What is most unprecedented, not about the health thing, is the quantitative easing thing. I'll just leave a couple of stats. The last time in 2009, they gave the money to the banks. Banks are relatively sensible. I mean, I know it might not sound so, but they're relatively sensible with their money. And what we haven't seen, we've only seen a very limited amount of inflation. But when you print money, you do get asset bubbles form. So finite assets increase in value. We have already had, up till this point, the government have QE'd and introduced 3 times more money into the economy than they did in the credit crunch of 2009. And it hasn't gone to banks. It's gone directly to people and businesses. And by and large, people and businesses are not good at investing and spending money. You know, if people are receiving furlough payments, a lot of them are going to spend it on fancy goods. Businesses also have a habit of, 9 out of 10 businesses fail. New startups fail. There's no guarantee they're going to spend it on sensible stuff. So when money is introduced into the economy and people spend it on share, you will get inflation. Inflation will kick into the property market, and that will mean an asset bubble. So as soon as the job market normalizes, you'll see a massive asset bubble hike. So this is just a window to get in. And the other reason, if you don't get in, you will lose out. Because if you've got, it's worse for people with cash. If you've got 100K in the bank, that 100K value is going to go down, down.
Yep.
You need to put it in something.
Yeah.
You put it in something where you buy from a motivated seller, you buy distressed property, and you can add value.
Yeah.
And that's a treble whammy of being able to hedge against that inflationary asset bubble risk. So if you do nothing and you've got money in the bank, you're stuffed.
No, I totally agree. Thank you for leaving that with us. Is cash flow king or is capital growth done with now?
I think it's they both are. I think cash flow and capital growth are 2 sides of the sort of coin, if you like. You need to focus on growth, both. Right. But at different times, you need to focus on one more than the other. So in a boom time, I'm focused very much on cash flow.
Right.
Because how much upside is there going to be in the growth when things are booming? And the time that we're entering now, we're kind of focusing on cash flow, but the emphasis is on capital growth.
Yeah.
Because if you think about it, from 2020 over the next 10 years, you're timing the cycles just right. You're going to get this 10-year period is going to be fantastic for doubling or trebling your asset value. Whereas if you bought in 2016, over a 10-year period from 2016, it would be hard to double it because you bought at a peak, isn't it?
That's
and then
correct.
it would go down a bit.
Down before you go back
exactly. Up. So when it's going up, cash flow is more important, and then long-term appreciation. When it's going the other way, you have to kind of, they're both important, but you have one a major focus and one a minor focus.
Okay.
That makes sense.
No, it
so
totally
now
does.
I'm shifting into capital appreciation as a major focus, but of course it has cash flow.
No, I get that. Well, listen, if you guys want a part 2 of this, I'm sure Ranjan will oblige. If anybody wants a part 2, let us know in the comments box. I'll be delighted to knock heads with Ranjan again. As I said, Ranjan, thank you for joining us. It's been a pleasure. We'll have that beer sometime soon in 2020, no doubt. Ladies and gents, thank you for joining us again. Once again, it's Akhil from our mortgage broker, and we look forward to joining with you soon. All the best. Bye-bye.